What up, everybody? Welcome on this beautiful Sunday. We're going to start in about 40 minutes, something like that, 36 minutes with Nic Chahine, options leader at the Options Inner Circle chat room. He's going to be with us talking about market stocks, following up on the portfolio, following up on what they're doing there in the chat room. It's a 24/7 chat room, so Nick is basically trading options all day. So we'll be talking about the markets as well, any developing news. So stick around, guys. It's pretty early. Just came in to say hello for a bit, and we're gonna start in about 35 minutes or so once Nick comes in the building here. Put the tickers you guys are trading in the chat. Let us know what you guys are trading. Hey, Goat, what's up, man? We're ready. We're just waiting for Nick. So in the YouTube chat, what's up, Max? Yeah, we got to give people some time to trickle in, So, but we have a Zoom conference going on at the same time. We just happen to put it on YouTube to give you guys, a little something there. But yeah, we're going to be starting in about 35 minutes, guys.
dad, Tom, and he has a heck of a
All right, ladies and gentlemen, welcome to today's session here. We're going to have Nic Chahine with us today. It seems like you guys are ready. I don't know. Let me know in the chat if you guys are ready to start, just to make it official here on my end. All right. And let's see. And let me know what you guys are trading in. Throw in the chat where you guys are tuning in from. Let us know where you guys are in. And let us know. We always like to see where you guys are tuning in from. It's always interesting to see the different places. Um, Philadelphia, Canada, Houston, Italy. Okay, I don't think I've seen Italy before. Um, Jersey, Virginia, Florida, Indiana in the house, Ohio, Chicago, Atlanta, Denmark. All right, keep it coming, guys. Let us know. And in the meantime, I think Nic is in the house.
I am. I'm right here.
Hey,
I'm reading.
Nic.
The first name that popped in was from Germany. That was a good start. We knew we were going to be international right off the bat. That's pretty cool.
Yeah, and anything interesting that you saw come out this weekend?
Oh yeah.
Nic?
Well, a lot of stuff. Today I just wrapped up my Sunday session with the members of the chat, and we looked over 124 tickers. Those are them, and those are the charts that go with them. So we did a lot of research, and there's a lot of opportunities here. There's some warning signs. And as far as the whole market, I do have an outlook for this week. Last week, I did have, one thing we were looking for. And this week, we have something different we were looking for. So yeah, there's a lot to discuss.
Yeah, there's a lot that happens during the weekend that, I mean, some people might just like completely take off and say, okay, you know what, I'm going to disconnect from the market Saturday and Sunday, and then Monday you wake up and it's like, what happened?
Well, that's what the members, the chat room members can disconnect, because what they do is they get an email from me in this evening with a 10-minute video as to what to expect this week. Like, ignore everything, focus on this. Like last week we had a few things we're focusing on. This week we'll have a few things we're focusing on. And that's why it pays to have somebody to do it in groups. Like if I'm not strong at one thing, I solicit help for that one thing. And the end result would be just a smarter group of people trading better overall. And yeah, the weekend is active, and I'm still not done halfway through. I still have a few deliverable this weekend, today. I delivered the video, the recording of the session that just happened. Literally, I just ended it, went and walked the dog, and came back, have my drink, and here I am ready to tackle.
You have your pre-workout?
I have a pre-workout, and I'm starting to get itchy too, because it has niacin in it and it gets you antsy. That forces me to get up and deliver a good presentation. So hopefully it'll be fun. So while we're talking, hey folks out there, I don't know if we have YouTube people today, but
yeah, we do.
So give me a 1 here. We can't see Nic. Nic hasn't done his hair, so you're gonna see Nic's screen. Trust me, it's much more interesting than Nic himself. So here's the thing. I want to know if you've done. Give me a 1 if you don't know anything about options and you would like the definition of options. Give me a 1. Okay, this way I will know the percentage of people that need that. So I'm estimating now we've got 12. The market.
Share your screen.
0.5. Good one, Zane. Okay, so we're about 24. We're up to about 10% so far and going. All right, we have a lot of ones.
Hey, Nic.
Yeah.
Are you sharing your screen, or is it
not yet? Not yet.
Yeah, go ahead. Take over the screen.
Okay, good, because I want permission of the man.
No, you're good, man. You're good.
Okay, so this is my screen right now. You should see a chart. Okay. All right, so we have a lot of ones. Those indicators, there's none on here. I have one. Everybody wants to know the indicators. There's only one.
Hey, Nic, someone's asking really quick, how many tickers did you do for the session right now?
124.
124 tickers?
There it is. It's count A. That's a formula that counts if there's a letter in here. So it's 124 tickers.
And what do you
Just
do
this morning.
exactly? What do you do exactly?
I did a video where I did all of this before I went on, and I put all my notes and pasted all the links. And then everybody got into a room. We were live like we're doing here. And I just went through one by one. In fact, if you can see my screen, I made a watch list called 1212, and that's all of them in here. 3 of them don't come up because they're ASX, so I have to manually type them in, but I import it, and now I have it as a watch list. And there were 3 tickers that I missed because they wanted to know about overseas markets, and I did not have the tickers, so we will chat about it. Sidebar.
Can anybody go to that session that you do?
Only
or how does that work?
Chat members only by invitation. So on Saturday, I send out the link saying, here's what we're meeting. Let's hop to it. And here is the request of ticker. So they have a link where they can put in their requests, and those are the tickers. So these are not my tickers. Those are your tickers.
It just sounds like a lot, like 120 trade ideas, like a week.
Well, there are a lot of ideas in there.
It's a lot of work on your end.
There's some that were, it's a lot of work. There's some that were micro caps that I don't bother with. There are some that are stuck in a range. So the only trade there is selling an iron condor of sorts. We'll talk about that. Includes Amazon, by the way, and Netflix. And there are some that have fallen into support that are worthy of catching, like Unity, maybe, Palantir, provided the whole market gives you that. So there are a lot of opportunities that we can trade however you trade. So everybody in the chat room, not everybody is purely options, but the step 1 is the same. Finding the opportunity is the same. SBCE is one of them. So you find the opportunity, you trade it however you trade it. But first step is the opportunity identification. And we do that in the chat room. Not everybody in the chat room trades options. We have futures traders, we have equity traders, we have a combination of all. What level of intensity is this webinar? How intense can we get? Well, we can get pretty intense. What is this? Are you calling me out? No, I'm just kidding. There, is that intense enough for you? Well, we went from being happy to facing each other with fists up.
Here's the thing. Nic does like live trading in the trading room, of course, but there are people that are very, very new, and Nic already has like a set of videos set like to get up to speed, so you can understand the conversation and you can understand what's going on, and you learn through that process as well.
Yes. So the idea is like Zane is saying, he wants reggae style. Everything is Ireman, laid back. That's the idea. That's how I like to trade. I don't want to be intense. However, people are actively trading. So what I just started last week, I told you about it, is this. This is a screen I share live all day. And there are 6 tickers in here, which are the major indices. And last week it was Apple. And I trade the opportunity. I share the levels that people trade. Like for here, this is the S&P on Friday. It offered opportunities to trade for shorts, bears, and breakouts. So if somebody was in the room with me, I drew the line. I said, you can trade the breakout from here. How you trade it depends on you. I would buy a call and stop out, or I can sell a put spread. And that's how we've traded last week live. And the opportunity changes. Sometimes they say, let's replace the QQQ with Apple because nothing's going on with the QQQ. And that's what happened in Apple on Friday. And this is the Russell 2000. There was a warning, get out here. Otherwise, this is coming. And this came almost exactly. And now this is the key for next week. But this live window is also now has become available for the active traders. But me, I like slow poke trading, identify something cool that has legs, like a weekly swing trade opportunity like this one, falling into support. If it has some technical indicators that also suggest some upside from here, that'd be great, like Unity. Falling, this rally was crazy, giving back half of it is perfect, falling into some consolidation. So these are the opportunities that I want. So how you trade it, usually you guys do regular, if you don't do options yet, so you probably tackle the actual equity itself. So you buy stock. So let's do this. This is new, okay? I'm going to back into the lesson. We're going to take a ticker and address it from a trade perspective. So Give me a few tickers, and I'm going to pick one. Hopefully, I know them. Okay, so I'm going to do SPCE. I'm going to do SPCE because it's the most ridiculous of them from the standpoint of its future hope. It's fallen into support. So if I wanted to catch this falling knife, and I'll do Rivian, okay? How about that? Two extremes. Gold is good right now. Moderna, not my jam, but it is better than before. So let's go with SPCE. This is a falling knife. Let's say I don't trade options. I don't trade options. I'm thinking, why should I bother with options? Okay. So here's a scenario where this stock cannot find footing and it keeps making lower lows. However, it is falling in a place where it has found support before, not an absolute bottom. It has been lower before. So what can I do? I can go out and buy 100 shares and risk $1,500 right there. Okay. So options provide me with ways that I can get long the stock in a safer manner. What did Nic just say? Safer options and stocks? Get out of here. Well, let me prove it to you. Okay. So here we go. This is SPCE. We'll go. This is an options chain on E-Trade. I am not recommending it. This is just what I have as a practice account. So, excuse me, this is what they call an options chain. Okay. Usually, if I wanted to get long a stock, I'll go in and then just buy shares, right? Well, options provide me different ways of doing so. So if I wanted to just buy the shares, instead of spending $1,500 to get long 100 shares, what can I do? This side here, they're called call options. I'll back into the definitions, I promise. This side here is called a put option. And before I define what an option is, I'll tell you how I would do it, and then I'll back into defining it. Okay, so I can go out and buy 100 shares, or I can come in here and do something else. I can go in here and buy something that affords me the right to buy those shares. So I'd lock my price at 16 for $230 for those 100 shares. So instead of actually owning the shares, I own the right to buy them. So let's say SPCE goes to 50 in the next 100 days. I'm guaranteed a purchase at 16. And for that price is $230. So for 100 shares. So instead of risking $1,500, I am only risking $230 and locking my price in. That's a call option. So it guarantees me the right, but not the obligation. I don't have to own shares already. I don't have to buy the shares. I'm just reserving my right. Hey, lock me in. I may call on you to give me those 100 shares at $16. Somebody out there sells it to me. Don't ever do that, by the way. Sell it, okay? Unless you own shares already, don't ever sell a naked call. Buying it, there's no obligation. Selling it, you're obliged. You become short the stock, and that's super risky these days, especially for a stock like this. So buying it gets me, quote, long the stock for piddly versus actually spending $1,500. I'm only out $230. It has downsides, but for now, it gets me long for a fraction of the cost out of pocket. Therefore, my risk is only $230. That's the only amount of money I can lose. And I can change my mind in a week or 2 days or in an hour to sell it. I'll go back, I own it, I close it, I reverse the process. Okay, that's one way. There's another way of getting long SPCE that involves no money out of pocket. I actually get paid to get long the stock. Yes, I actually today get paid to get long the stock. How is that? Yes, they sell puts. So this is the put side. So if the call reserves the right for me to buy, the put side, I'm committing to buy. So let's say I want to buy it at 13. I go out there, let's say I want to buy it now. And instead of spending $1,500, I can collect $140 to promise to buy it at 13. So now, since I'm selling, I'm obligated to it. So I'm saying, hey, anybody wants to sell their shares at $13 between now and 100 days, I'm your man. Come to me. I'm a buyer. I cannot change my mind. without taking a loss. So I sell it, I collect the money, I'm long 100 shares only if they give them to me. And they usually don't unless the stock price falls below 13. So these are two methods. One involves collecting money to be long SPCE. One involves paying money to be long SPCE. Let's say I want to take 200 shares, usually. So what I would do is I would sell one put and buy one call. What? Yes. So if I did this, I'm long SPCE for $100 for 96 days. But I have to commit to buying 100 shares from this one. I am not committed to buying 100 shares from that one. I'm just reserving the right. This would be a fantastic way for me, for somebody that wants to own shares right now. All right, let's back into the definitions. This is like a jumping in the deep end, and now we back out and let's define the stuff. Okay, so you've heard about options. Okay, Victor, I'm coming to it. I just gave you a glimpse as to keep you interested why you need to learn options. I just showed you a way to get long a stock virtually for free. Okay, so let me back into it and let's define options altogether. So this is I'm going to switch out from SPCE, switch to, you know what? Let's stick with SPCE. Why not? We're here. Okay, so here we go. Options are contracts. And as with all contract, you have terms. And I'm going to go through some of the terms that are important to me. Now, if you take any options class somewhere else, which I have never, I've done this all. I'm an engineer, by the way, electrical engineering eons ago, and then jumped into marketing and then finance. And then all the while I've been trading, and then finally discovered a few tricks, discovered options, and then got super good with the charts. All in plain, simple terms, no Greek. You won't find an options class anywhere else like this. They will all concentrate on Vega, Gamma, and all that bullshit, excuse me, but defining what a delta actually means in English. I'm telling you what it means as to how we use it, regardless of what it freaking means. How can I put it to use? Okay, so they are contracts, so they have terms. First term is time. Therefore, you see a whole bunch of them. Okay, so this is December. This expires on Friday, this coming Friday, only 5 days. This one is 7 days longer. So you go out in time, you can go to January, which is about the 21st of January, and then March, April, you can go out to 2 years from now, January of 2024. So the idea is you pick the time frame that suits your thesis. Okay, if you're a long-term slowpoke traders like me, I prefer somewhat longer-term commitment, and I can plan around it. Okay, so I'll zoom in when you need to see numbers. Don't worry about it. So the idea is to pick a time frame that suits your style, and then let's delve into it. So I'll go to January. Actually, I'll go to March since I already showed you that. It's easier that way. Okay, so this contract has 96 days on the clock. Okay, so then the second term would be the levels. Okay, I said lock me in at 16. I could have said lock me in at 17. I picked the level that I want. The price drops accordingly. It's a longer shot thing. So it gets cheaper as you go away from current price. Same with the put. The puts get cheaper as you go away from current price. Okay, so the levels matter. And we'll come to, I'll get you an idea as to which ones I buy, which ones I sell, and all of that. And therein lies a lot of the tricky stuff. Okay, so term, we got time, we got levels. Now, what are the odds? So the odds is another one also. But first, before I go to the odds, this is where I would stop and say, let's define risk. So let me see here. I'll put up a scratch pad, and I'm going to ask you for a little quiz. I'm going to ask you to tell me how you would define risk. If you were teaching this class, what is risk? I am confident you will all get it right, but not completely right. What's the first element of risk? No, in general. No. Loss. Okay, CO2. No, 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 no. Come on. No, stop thinking options. Risk in general. How much? Okay, there we go. How much you could lose? Losing your money, loss. There we go. Now we're talking capital preservation. Absolutely. Okay, Timothy, I like it. Lose your premium. Only one person addressed the other side of risk. Okay, I'm going to save you out of your own misery here. So here's how you define risk in a way that works well for options and in everything in life. First part is, how much am I going to lose? What's at stake? What's the risk? Literally, what can I lose? If I in sports it works, in racing it works, in anything. If somebody says, hey, let's go jump into the lion's cage, what's going to happen? I could die. Therefore, you don't do it. The risk is unacceptable. First of all, you define the acceptable level of risk, and you should be okay with the worst case scenario. If you're not, do not take it. If you are, okay, you move on. That's one part. That's not the part you manage. That is not the part you manage. That is a decision you make and you move on. The part you manage is what? Timothy got it right. What are my odds? Okay, what are the chances I'm going to be right or wrong? That is the part you manage. Because you take a trade, the probability of success changes with time and circumstances. You cannot stay as confident as the first day you took it. You might gain confidence, you not lose confidence. In any case, you have to decide at one point, hey, I've lost enough confidence that I don't like this trade anymore. I should take it out. So that is the price, the part you manage, the odds. Okay, so in this case, luckily with options, the odds is a number on a page. Can anybody tell me what column that you guys are looking at is the number that gives me the odds? Delta, look at that. Everybody's been here before. Perfect. I love it. Good job. Okay. So let me give you the definition of delta. The definition, I think, per Wall Street terms, it's the amount of money this changes at any of these with the change of $1 in the underlying. Pretty confusing way of saying it's your odds maker. How can I know that? If I look at the price, current price was 15 and change. The delta, this is the delta column. The delta column is about half, 0.5 on either side. So if I close this out, this is the delta, this is current price, it's 0.5 here or there. So this is 15.2, the actual price. So it's somewhere in between these two, closer to 15 than 16. So the 0.5 is right there, which makes sense. The 0.5 is right around here. Sometimes there's a little skew from like how bearish and how bullish the market is, but don't read too much into it. The bottom line is, if I buy or sell a put or a call option at current price, my odds are 50-50, just like buying stock. 50-50. No, it's not theta. Theta is a fancy word for time. Okay, so the odds maker is my delta. So anytime I'm taking a bet with options, I should decide what delta am I doing it at. We'll get to that in a second. That is the most critical decision you can make. Because first, you pick the level of money you want to lose, right? That's the first part of risk. How much can I lose? Let's say I decide to risk $2,000. I'm making this up. Then the second question, what odds do I want? This is where in options, you can actually pick your odds. If you want strong odds, you want a high delta if you're buying stuff. Like if I'm looking to buy a call or buy a put, if I want conviction, I want a high delta. And then I'll find a good balance of what works for me. So for example, for me, I don't like to buy a 40 delta. I like to buy slightly lower than 40, which is it doesn't have as much theoretical odds of success, but it's still reasonably realistic. If I go too low, I'm just, smoking something. And I'll share with you an example. So if we go to current price, it'll be easier to, like this says, there is very little chance that SPCE in the next 5 days will be at $20. If I look at the delta, it's 0.05. That's tiny, slightly bigger, 10, 15% odds, 30% odds. So if I were to bet for this week, this is not a trade alert. but I'm saying that's the type of, this is the lowest delta I would buy. Okay, this is the lowest delta I would buy as a trade. These are way too high to be realistic. If they hit, they'll pay big time, but they're way too high. So time has run out and these people lost their money. 8,000 contracts. I bet you they've been here for a while. So this is a low delta, too low to be realistic. This is the kind of stuff I would sell if it carried premium, but it doesn't, so I don't even do it. Same on the put side. If I go below current price, it says in the next 5 days, there's very little chance that SPCE would be 11 or 12. Look, very low delta, right? So you would have to be at 15 or 14 for it to actually mean anything. So the delta is your odds maker. First, you decide how much money you want to lose. You could afford to lose. Then you decide, okay, what delta do I pick? If you pick March and you want a reasonable delta, this says that there's very little chance that SPCE was going to be 5 by March. That's correct. Better chance at 10, that is still pretty low. Better chance at 11, that's still pretty low. If I wanted to, quote, short SPCE, I would buy this or nothing lower. If I wanted to get long, I would buy at the money, meaning, hey, I don't want to guess how far it moves up. I want to start making money as soon as it moves up. Then I would buy this one. Otherwise, I can move up to this 21 because then the delta is 0.3 something. So I would not want to buy any of these. They're just too far up. Here, these two, okay. That's personal preference, okay? So somebody's asking about bid and ask spread. That's a different conversation. I'll answer it in a little bit. So let's backtrack. What have we learned? We learned about options being contracts and they have time limits. We just focused on 96 days for an example. And then I jumped into 5 days to explain how delta is actually the odds of success. So whatever I do, the risk starts with the delta. Once I decide how much I want to risk, I need to use the delta to decide my odds of success. And then I manage that. For example, if I take a trade, just take the spirit of it before. If you still bog down with the options, don't worry about it. If I take a trade and I take a delta of 18, let's say I buy this one right there. The delta is 44 and stuff happens and this delta, the price drops for whatever reason and this delta turns into 10. Then I'm no longer realistically going to do anything with that. So I should take the bet off, salvage whatever's left value, try to do it somewhere else. If the delta drops too low, if I'm a buyer of that, then my odds have dropped below my acceptable level. Personally, I don't like anything under 0.3. You're saying, Nick, that's pretty high. Well, 0.5 is a coin flip. You got to remember, it's not an absolute number. It's a relational number. Okay, so in the chat room, I always get the questions about, hey, what do I do with my trade? It's I bought these. I actually have 2 questions. I owe it to somebody. They asked about NEO, and I'm trying to remember what the other ticker. So I said, give me the particulars and what did you pay for it? And then I can backtrack into their logic. So if they bought a call, I believe they bought a call in NEO and the other stock, I can't remember which one. They're both good stocks, but they're down on their luck because of the price action, because of the headlines in NEO, for example, in China, delisting of Didi, etc. So I like the stock too, but if his delta is too low now, I would suggest take it off, eat the loss, and reset it in the place where time is not going to be as much of an issue. So we're going to have to come up with a different strategy. So him paying attention to the delta allows him to salvage a trade, which could die crappy. It's a good trade. He just had bad luck. So that's what I owe him today or tomorrow morning when I see him logged in, because I tried to find him offline and he wasn't logged in. I was. So I will have to address it with him by Monday.
Yeah, for those guys that are asking about Nick's chat room, I'm gonna go ahead and drop the link in the chat, guys. This is basically where Nick is. It's the 24/7 options trading chat room. There are sessions on Sundays. It's not these sessions, but Nick, maybe you can show them a little bit of what goes on down there in the chat.
Sure. So we discuss trade setups and address questions that they might have. I comment about the daily activity, and then I used to comment a lot about the intraday movements until now I broke out that session into a live video. I post less about the intraday because now I cover it live. However, the opportunity here is in the discussions. So they are in here already. I just shared the video for this session that I just did with them. Let me see here.
Really quick, Nic, they can also direct message you outside of the general chat.
That's what these two notifications, I have to go in and do it. But if I click on this one, it'll show names and I don't want to.
Okay. So like if you guys are like shy maybe of putting something like about your specific situation in the general chat.
Yeah, like this person
direct
here.
Message, Nic.
Did you get my message? That was a DM. Yes, I did. And I have it on my to-do, but I didn't see him this morning. And we had a crypto discussion. I shared my experience as to how to avoid one mistake that I didn't know about in crypto. So, I paid the price so other people don't. And this is the Excel spreadsheet. This is the video that was still compiling when I popped into this presentation. So I said it's available after 20 minutes. So the chat room was a buzzing. It's growing pretty fast. So I'm going to have to ratchet up the resource page for it. Like we are having more signups that I can keep up to the same level of education.
Yeah.
So the resource page that you guys maintain up there on Benzinga is great, but I'm going to have some sort of a secondary one with in like Google Sheets or something to keep it all in one place.
Here's the best thing, that it's like rolling, right? So like, for example, as earnings come, you guys, trade around what's going on. If there's anything in particular that's moving the market's trends, you guys are trading even crypto, right? Something like that. You
We're
guys are
discussing crypto, and we might have a crypto like session, special breakout sessions for crypto. So on Fridays, I share an Iron Condor for all of these with a bit video. This is about a 10 to 15 minute long video explaining Iron Condor. So this by itself is a good lesson on options. So you don't have to take the trades. In fact, I encourage people not to take the trades, to take it with paper money or write it down. And then when you're finally ready to practice with real money, you try one contract, so risk like $400 maximum or less. But it is a good lesson to understand options. And it is repetitive. It's all the same stuff. We discussed, like everybody's asking stuff, Etsy, Apple, anything you want is discussed. If I miss a ticker or a question, please direct message me because I'm busy during the day. I may miss something. This is Etsy. Somebody asked about it. So I had suggested this is a trade setup from 12/7 for Etsy. And one way to do it is to buy upside, which you may, it made immediate money and then it faded. So if you didn't book the $6 that this delivered, the basically $2 in profit, then now you're sitting on a slight loss. But if you sold puts or put spreads, you're in the green already. So this is an actual table that I shared in the video. So it actually, somebody said, let's see here, I wanted to go along IBM. So I give you my opportunity there. Lucid, it's a trading opportunity as well that we discussed today. And Affirm was a good breakout. So discussion goes on here. This is a short-term trade on the NASDAQ, 1 minute. So if somebody's really active, they know to chase it down from here, chase it up from there. That was whenever, 12:10, so on Friday. So the discussion is lively, but you drive it. You drive the discussion. If you want to discuss the stock, hit me with it. If you want to, like here, somebody was helping to find ticker symbols in their platform.
Nic,
yeah.
I just remember that one time whenever I was in a trade and I just needed to get out, and you helped me out that one time. So like I know there's other people that maybe are stuck in a bad trade,
right?
And you kind of save them from damage.
Somebody said they're stuck in somebody has I forgot, a credit call spread in the SPX, and the SPX kind of lunged towards it on Friday and it expires next week. So I'm going to have a discussion with him on Monday and see what we can do about it, see if we can help him. First question from me to him would be, why did you take it? And if that reason is still there, if not, you should just book the partial loss or move it somewhere else to have better odds or balance it out.
It's a great learning experience as well for other people to see what other, because it's like the experience that other people have. Look at the poll I put out, Nic. If they'd like to replicate your strategy, for your 90% win rate.
Yeah,
96% say yes.
Yes, it's not because I'm a genius, because I go with the odds. I literally go with the odds, and I'll show you in a second. So let's continue on with the education piece. So we were still defining stuff, right? And we took a tangent on the delta and the odds of success there. So you can't get around it. When you buy a stock, you do your homework and you think you have an edge, but in reality, there's a seller on the other side of every trade. So the person selling you the stock thinks you're an idiot, just like you think you're a genius. Why are they selling the stock? Because they completely disagree with you. So you're buying shares because you did homework and you gave yourself an edge, but it's a fictitious edge or a self-assigned edge because you don't have a mathematical representation of it. So it makes it difficult to say, I've lost 10% of my edge. It's hard. You'd have to be a super good trader and very disciplined. In this case, you can tell that you lost 10 points off your edge if you buy a put that's 0.30 and then suddenly it's 0.16 because the stock rallied. You say, you know what? I shorted that stock and dang it, I lost. You should get out. So there is a mathematical representation that makes it easy to do the right thing. Okay, now back to the definition. Okay, now I'm going to define, I defined already, I said what a call would give me. It's basically the contract that locks in my price. So I earn the right, not the obligation, to buy shares at that price. And all of these are calls. The term is what level do I want? And the price is drops the higher I go because it's lower odds. There's much lower odds of this happening than this because price is almost there. I can't tell that for certainty it's going to be at 23, maybe a 28% chance or so, roughly. Now, down here, it's more expensive because it's almost a sure thing. We're right there. Okay, so that's what a call is. It affords me the right to buy. It's a contract between a buyer and a seller. The seller of that call is at my mercy, me, the buyer. If I say, give me shares, they have to give me shares. Okay, so I'll get to my columns in a second. I want to get the flow out. So far, I've only talked about the mark, which is the price of the option, and the delta, which is the odds maker. Okay, I haven't addressed any of the other ones. They're secondary. I'll explain them by the time we're done here. All right, so that's the call side. It's the debate over upside, locking in price for ownership of the stock on the upside from the call side. You can buy it, you can sell it. I recommend highly to never sell it unless you own shares and you want to sell your shares that way. Because if you sell a call, you're outright short the stock. Let's say you sold a call in GME in January, you went bankrupt because GME had a super spike and you were losing money for as long as it was running. And if you were not, six-figure account or seven-figure account, you got liquidated by your broker in order to cover the margin call on that one. So don't ever do it. In this environment, it is just complete. I mean, you hear people doing it. Oh yeah, I sell the straddle. That's being short something. But yeah, I'm selling the put against it. Well, that's only limited protection. But what's the number one definition of risk? Number one rule of risk is knowing the worst case scenario. Correct? Would you take a risk? If you see a hole and they tell you there is a cushion down there, but they don't tell you how far the cushion down, would you jump in it if it's a black hole? No way on earth would I jump in it because I would not know the maximum risk. It could be a foot. It could be 1,000 feet. I don't know. You can't jump. There's unlimited risk. When there's unlimited risk, that's the scenario I would never allow for anybody in my family. Number one rule is knowing the worst case scenario. You don't know the worst case scenario, you're pure gambling. Pure gambling. It's okay if you can do it. That's not for me. Okay, so clear it with your family too, by the way. Ask your spouses before you take the trade because they might say, nope, I'm out the door if you do it. So it could be pretty problematic. So that's the call side. On the put side, it's slightly different because the worst case scenario is 100% just like owning anything. If you buy shares, your worst case scenario is losing your money. And that is an acceptable risk for me. Losing my money is totally acceptable. Hopefully I don't do it by using smarts, but the worst case scenario, I can see it. It's zero. The other way around, I can't see it. It could be a million. I don't know. So in this case, it's a little different. So let's define a put. So the put, it's like the easiest way to define it. It's like insurance. First of all, calls and puts are not bearish or bullish. What you do with it makes it, gives the intention. They're both bullish and they're both bearish. It depends on how we act with them. So I'll give you an example. Let's say somebody is worried about holding SPCE for the next 90 days. They're going on vacation. They feel something in the air. They had some clue from somebody said, hey, you better be careful. There's going to be a headline about space travel, blah, blah, blah. They want insurance. They bought the shares at 3 or 5. They're happy losing a little bit, but they don't want to lose below 13. Okay, so what do? They can go out and buy insurance. So they buy 100 shares, one contract, because that covers 100 shares. Everything is 100 shares. That's another term I didn't mention. I'm sorry, I assumed it. So every contract you buy or sell is for 100 shares, anything. So in this case, if I own 100 shares, I only need to buy one contract. It will cost me $140. Small price to pay, but I shouldn't do it all the time. But periodically, if I need protection, perfect. Small price to pay. Then what does that give me? It gives me the right to sell my shares at this level. I chose 13. I could have paid more and chosen 14 or less at 12. I have the right to assign my shares to somebody at any point in time. It does not have to be below 13. That's a misconception. Price can be anywhere when I assign it. And if it goes below 13, I am not obligated to do it. So this is a misconception. Now, people never usually assign it when price is above. That makes them horrible traders, but it can happen if they want to. So in this case, if I bought this, I'm guaranteed to sell at 13. Let's say we wake up one day, the market's crashed and SPCE is at 5 or 10. I'll call up my broker. Hey, I own this put. It hasn't expired yet. It's got 1 hour. It's got 1 minute. As long as it's still on the board. In fact, I can still exercise on expiration day after hours until like 5 or 5:30 p.m. So the person that sold it could have thought they were in the clear, but then I can stick them with my shares after hours. So I call up the broker and say, sell my shares at 13, even though the price is 10 now. And you can. Boom, shares off your book. The 140 it disappears. You paid it. You got your use out of it. The person that sold you that put, the other side of that trade, is forced to buy your shares. They don't have a choice. They wake up owning shares. That happened to me recently in a stock I want, so I held it. So they are, quote, assigned. They are put the stock. That's what they say. They are put the stock, meaning they were forced to actually do what they promised they wanted to do. When they sold it, I bought it. When they sold it, they said, yep, we want 13, no problem. Even if it's at 10, we'll take it at 13. They did their homework. They felt that was cool. Now, their break-even point is $1.40 lower. So they're cool. They haven't lost money until 11.50-ish because they collected $1.40. They got assigned at 13. So $1.40 lower is their break-even point. So it's not a big deal. It's a calculated risk and it's a win-win situation. They sold the put to own the shares lower. They got it. You bought the put to get protection. You got it. You're both not bearish the stock. If you were bearish the stock, you would have sold it. You would not have bought insurance on it. If they didn't want to own shares, they wouldn't have sold the put. So it's a bullish situation when you have a lot of puts. People say, oh, look, there's 2,000 puts down there. Let's go buy that.
Hey,
I
Nic,
disagree.
It's really good at least to see that on your end that you are all for like consistency when it comes to options trading, because I know that at least when I started trading options, I was only doing calls and puts. That was very volatile. And this approach that you do have, not just the technical, but as well as the approach to the credit put spreads, which are your favorite.
So the credit put spread, let me explain why the ratio works for me. So assume you bought shares. Assume you bought shares for upside appreciation. So let's say on the same day, today, Friday, you believed in upside in SPCE. And I think it's a pretty good trade long-term, half position. Side note. So you believe in upside in SPCE. You bought shares. I believe in upside in SPCE, or at least no downside. And I don't need to be surgical. I would sell a put that has a high degree of success. So this one does. But me, I would be comfortable selling this one as well, even though statistically it's not this is my usual setup, a low delta when I'm selling something. So what does that mean? So you need a rally to win. If you bought calls, if you bought shares, you need a rally to win. That's the only way you can make money. Okay. If I sell a put, I'm also bullish the stock. I don't need a rally to win. So if the stock moves higher, I win. If the stock stalls, I win. If the stock falls 10, 20%, I win. The only way I lose, if the stock collapses below 11, then I start losing after getting assigned shares. Now, I have to be able to face the fear of owning a trade that is showing losses that in the end will disappear. So this trade will show losses if the price falls, and they're paper losses. If I panic and I buy it back to say, no, I don't want to own shares, boom, losses. That's where the amateur hour comes in. If I sell a put, my intention is to not defend it, take the shares like you promised. And then you deal with the shares afterwards with no losses, or maybe even some profits or some small losses. Example, let's say we wake up one day and the price is 10. Holy crap, I just lost a lot of money. This $1 turns into 3 or 4, so I lost like 300-400%. No, as soon as I get assigned, this trade disappears, poof, goes away, and it keeps the money. I keep the money I collected, and then I own shares at 12. My break even is 11. If it opens at 10.50, I'm only down 50 cents a share. Big deal. Okay, so this is not a covered put. There's no such thing as a covered put. When I sell a put, it's cash secured. The bank knows I have enough cash in there to buy the shares, and that's all hunky-dory. So I would never sell a put unless I want to own and am able to own the shares. Covered calls is something different, but I wouldn't call it a covered put. It's a cash secured put. Covered put, maybe credit put spread, you can name it as a credit put, but I've never heard, I don't refer to it as such. How about that? And you don't always get assigned. I sold puts in X last year at 9. It went to under 5, and they did not give me the shares. I couldn't believe it. I made money, a lot of money on it, because of idiotic behavior on the other end of my trade. So I don't know what they were expecting. The stock got slashed in more than half, and they still wouldn't let go of it. They loved it. Well, they made money in the end because they hung on to their shares. So I made money. They made money. I didn't own the shares. They kept their shares. Everybody's happy. So the put is, it's not bearish. Now, if you wanted to short a stock, that's what you use. Because shorting a stock, I've just told you, is ridiculously silly and risky by selling a call or by selling the stock outright. By the way, do you know how people short stocks? Let's say you wanted to short SBCE. You come out and say, hey, who has 100 shares of SBCE to lend me? I'll return them. You're so confident it's going to come down. You borrow the shares, you sell them, you put the money in the bank. The stock falls like you said it would. You buy them back, you return the 100 shares, but you bought back at lower price. But if it starts rallying, you're on the hook to return 100 shares at whatever price is available. And if it becomes hard to find, you can't find it, you start outbidding each other, and that's you get a short squeeze. People outbidding each other that's Tilray is the original short squeeze example. You think it's GME, it's not. It's Tilray. One day it went to $300 out of nowhere. That was back in 2018. I was trading Tilray. I sold puts, and it was so violent, I couldn't book my profits. I had to give up 40 cents. I couldn't book my profits. Did we lose somebody? Somebody saying hello. Good.
Hey, what's up, Nick?
Nothing. Somebody's shout outs.
I wanted to ask you something really quick. Because I know that you mentioned a while back something that the jobs report, like how they collected it, right? That it wasn't that it was a weird way, right? You know, and then like,
it's a silly way. It's inaccurate number at best,
right? So then I was looking into the CPI number as well, and also, so like I'm thinking, how is it that, like, you know, people are making policy and investment decisions with these inaccurate numbers?
Yeah.
What would you say is your accurate like what is
So,
your
so
indicator?
this is where I'm not an economist, but somebody this weekend, I believe, squawked about the fact that the CPI is not reflecting the actual inflation number. It's 2 digits. I think it's Bill Ackman, the guy from Pershing Square, the
Yes,
guy that cried on
yes,
TV. Okay,
yeah.
so the guy with the white hair, if you remember him from HLF, he went on and whole Wall Street went after him because he fought Carl Icahn trying to short a stock. I think it was HLF Herbalife, and he did like one presentation on TV after another. Like he was short the stock and he made himself a target, and they battled him to no end. Anyway, he said that the CPI is not that accurate. I don't disagree. I have less than zero confidence in the government numbers. Not that they're maliciously manipulating them, although they can, but I think they're inadequate and they're hand collected. It's just embarrassing. It's embarrassing.
Basically,
but it is the broken ruler that they're using, and you have to continue using it. But here's the story. We know everything is more expensive. I don't need an inflation report. When I go to Costco, I'm paying an extra $2 for milk from 12 months ago or 14 months ago. So I know it's there. I know my gas is $5. I know the cars have never been more expensive. I know the houses have never been expensive. Everything has never been more expensive than it is right now. Do you need a report to tell you that? I don't need it. But it hasn't stopped spending. Once it starts crimping the spending, then it becomes a problem. Otherwise, inflation is not the problem. You know what was the problem? Why do we have this much inflation? Because the Fed and the government, more so the government, the White House, than the Fed, just buried us with cash. They did way too much, way too much. This is not a political statement. This is a mathematical statement. When my son, he was 19, can make more money sitting at home, and he has the ability to go get a job, who's to tell him, nope, you shouldn't take the free money, you should go get a job? It was just way too much. They didn't do a means testing. They went out and threw money everywhere, which is a panic way of doing it. Maybe they didn't have another way of doing it, but that's the math. I mean, there's just too much cash in the economy that needs to burn out, and it takes a long time to burn out. So it's the other day I asked, is it 3 trillion, 5 trillion, or 7 trillion of cash? I don't know, but let me give you one thing. If you spend $1 million a day, you will need 2,740 years to burn through 1 trillion. So we have a lot of years to go. And also the inflation, by the way, consumer spending is about 2/3 of the economy, so they say. So it's important. And if we're spending like fools, and we are, then inflation is not a problem. It's just a complaint. Oh my gosh, I can't believe it. You see these stickers, Biden did that or whatever. Everybody's complaining and pointing fingers about inflation. It doesn't matter. Everybody's still spending anyway. It will become a problem. We're not there. Okay, back to whatever we're doing. I got sidetracked. Where is it? Okay, so the buying a call reserves my price. Buying a put gives me insurance, or gets me the opportunity to get in if I'm the seller of that put. So I was coming into saying how I would short a stock responsibly. Let's say, okay, let's pick a stock that's high. Let's go with the LCID. Somebody said LCID. Whoops. Lucid. Questionable stock from the standpoint that they're just starting to build the P&L. They don't have income yet, substantial. So it could go either way, correct? So if I wanted to short LCID, I would have to argue with super strong fans. The fans of LCID, I guarantee you, are super passionate because I do videos every once in a while on it. And whoo-wee, do they let me know about it when I say something bad. By the way, on social media, where am I? I'm at Racer Nick on Twitter and StockTwits. Okay, so the idea is to try to short the stock with limited finances. Okay, so how you can use puts to do that is if I buy a put on a stock and the stock price falls precipitously, that put explodes in value. I wish this was like the close for a day, then I'll show you the percentages. Like today, Friday, the stock was up 3%. then you would have seen the impact it would have in the call side, and you can extrapolate what it would be on the put side too. We'll find another stock that fell, and you'll see how much. So if the stock falls 3%, and I just bought puts before that happened, my puts would be up like 20%. But of course, if somebody guesses the wrong way, they'd be down that much. That's where it gets tricky with buying options, where you can lose a lot of money without knowing what the heck's going on. Hey, what happened to my money? Well, you bought this, you bought that, you bought this, and you were doing it willy-nilly. All right, everybody get a piece of paper out, sticky note, lesson time. You have to put this next to your desk, on your desk, next to your computer keyboard. What not to do is not take a trade where there's no trigger. So NT, no trigger, no trade. And if you don't use charts, no thesis, no trade. And write this down. I think it's going to go up is not a thesis. You need a reason. I think it's going to go up because I did some homework and everybody's missing the point that they're going to do, blah, 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 blah. Now you have a thesis. Without this, how would you know when to quit? Okay, so no trigger, no trade. You can see it on the chart. If you have a trigger, go for it. Then you know when to stop. If that trigger breaks, then you're done. No thesis, no trade. If you have both, that's even better. Okay, so that is the one side. You buy a put. If you're right about the stock falling, that put appreciates in price. Okay, so that's how you can quote short a stock with finite money. There's another way, but we haven't talked about spreads yet, so I won't discuss it. I did it for Apple. I won and then I lost, but it was a finite amount of money, and it was an intraday trade, and I disclosed it as such. And it's good to have limited downside. So the maximum risk was acceptable to me, and you do it. If delta on call is 0.45, well, you can study the options to get like body language as to which way people are expected. And for me to answer that, I download data and I share with on open interest, which is a good time to go out and start defining these extra columns. Yes, you can read into that, Mark, but better know what you're doing too. Okay, so let's define the rest of these columns. First column, mark, which is the price of it. They call it the mark. Sometimes they call it the mid. Somebody said bid and ask. Do I worry about bid and ask? I don't even have them on here because I deal with liquid stocks where I know that if I go to buy something, the bid is this, the ask is that, somewhere in the middle is where it's going to fill. If the stock is not liquid enough for it to fill there, I don't mess with it. Most of mine are liquid, so I don't worry about showing bid and ask. I know it's going to fill somewhere at the mark. So that's mark. Okay, change in mark, clearly that's what it is. The delta we already talked, that's the odds maker. That is like highlighted in red and bolded. That's pretty important. This should be here. We'll move it. Volume and open interest. That's where the confusion comes in. So I'll start with open interest. Open interest is the positions. These are the positions that were there Friday morning. So whatever happened during Thursday trading session, the end result was this. As of Friday morning, these were the trades that were there. And when we opened on Friday, these were all zeros. And then this is what happened on Friday. So Monday, when we open, this will click back to zero. And the end result of whatever happened on Friday will be reflected here. So open interest is a static number. It does not change during the day. This is what changes that show us what this is going to be the next day. Okay, so that's the difference between open interest and volume. Now, I download the open interest data for the indices and a few stocks on a daily basis, and I look at them to see if there's body language. And the downside risk for next week is big. It looks like there's downside pressure. That's my interpretation of it. It's nothing I can tell you, look for this or look for that. It's a big explanation. It doesn't always pan out. But when that's going on, I know that it's a binary outcome for next week. We're either going to whoosh down for quickly, and it shouldn't be like a crash. It just needs to be like a scare, maybe a Thursday dip or maybe a Thursday night dip into Friday morning, and then once we have the Fed meeting, maybe we dip into the Fed and rally out of the Fed. Because the Fed is, quote, the scary part, but they told us what they want to do. Why would they change course right now? I mean, the guy, I think, is making a lot of mistakes, but why? Why change course right now so close? What's the point in speeding up the taper 3 months or not? Anyway, it will cause a headline dip. Buy the dip. That's my, if the Fed causes a dip, I'm buying it. How about this? Okay. So, and if the Fed causes a dip, then I saw it coming from the open interest. There is downside risk. So let's see what happens. Okay. Phew. All right. Where were we? Okay. So we defined calls. We defined puts. I mentioned how you can quote short a stock using puts. Now, buying options is tricky because time is against you. Somebody said theta. That is a risk, the time. So if you hold, and I love this statement in all the other classes you take and the books you read, all else held equal. On what planet does all else hold equal? None that I know. So don't worry about what follows that statement. What they're saying is time is against you when you buy options. Time is your friend when you sell options. And here's the ticker. Here's the selling point to say, I need to listen to what Nic does and start to do something like that, which is most options expire worthless, right? Most options expire worthless. That's what they say. Why on earth would you want to be buying them? You'd want to be selling them. Okay. So which ones do you sell? The easy thing is, okay, let's go to Palantir. Which is easier to say that Palantir is going to 30 in the next 6 months, or Palantir is not going to 12 in the next 6 months? Which is easier to say? Okay, it's easier to say where a stock is not going to go than it is where it's going to go. And that's my point. I sell risk where I think prices are not going. So how do I use open interest in my trades? Pedro's asking. I use it to decide on where I place my risk. If I can sell a put below a big open interest, I would do it. Okay, you are losing in Palantir at 1976. You bought it at 1976 as a stock and you're losing? Yeah, well, why it dropped? Because the small caps is what is dropping, the IWM, and it is putting pressure on all small cap looking stocks. And Palantir, you can watch ARK. Whatever happens to ARK stocks is going to happen to Palantir. This is the most idiotic market I've ever met in my life. They call it artificial intelligence. Artificial my ass. It's more like artificial dumbness. They sell everything. Just because ARK is selling, they sell everything.
Hey, so, Nic, really quick here. Just want to give a shout out to Tom, Jerry, and Maria for joining the Options Inner Circle chat room. Welcome to the family, folks.
Wait. Tom and Jerry? I love it.
Tom and Jerry. Dude, we got a special one.
Welcome aboard. Okay, so somebody keeps asking for a riot. So the fact that you're asking for a riot, that sounds like you're in here for the charts, which means it's a no-brainer for you to be in the chat room because that's what we do all day. Charts. Be in the chat room already. We'll get to riot. We're still in an education piece. We're not reviewing tickers. We're talking about, for example, this person said they were long Palantir and losing money. By the way, I don't blame you to be long Palantir. It's a good company, has a good growth rate going on and good leadership in a artificial intelligence environment that's only going to get better. Wait, what happened to Palantir?
No, but seriously, Nic, you have been going over a lot of not just trade ideas, but also technical analysis. And right. I'm following everything because obviously, I'm paying attention to everything, but definitely a lot that. Yeah.
So here are my lines, and I just started to put another one. Support zone, if lost, new leg lower. Guess what? Bonk. Support zone, if lost, new leg lower. Are you picking up on the pattern? Right. So you can't trust upticks until they establish a bottom. Step one of establishing a bottom is stop making lower lows. Now, if you're trading actively, you look back, this is a 2-hour candle. So every candle is just 2 hours. You can literally draw a box and to tell you the next lines of demarcation. So now, Monday, Tuesday, watch for this. Step one of a recovery is to get above that 20.2. Step two is the muck that you just lost up there. But this is where they're going to fail or try to fail versus making a higher low. So you want to keep making progress on a shorter term, This is not a trend line, by the way. This is a progress, not a trend line. I didn't connect two lines. I'm saying you want to make higher lows. You don't want to fall below 18.9, 18.7. So you don't come here and make a lower low. So the first step is to stop making lower lows. And for that to happen, you need a sideways consolidation zone, hopefully with higher lows, to attack prior failures and finally snap out of this descending trend line channel. Okay. See, there's another person that needs to be in a chat room with us. Seaborn Thomas. Do Fubo, thanks. Big capital letters. You're dying for Fubo. Guess what? I did Fubo this morning.
So you would already. So here's the thing, right?
Here's Fubo right there. I guarantee you it's
ideas.
right there. See, look. Base case, but can't trust it. At least set the tight stop. And you click on it, you'll get the Fubo chart. Be in the chat room. I tell you where to stop out. Okay.
Stop out, entry, everything. Well, I mean, that's great.
So this is what we do. If this is what you need, what's it cost to you? I do this every day, all day, even on the weekends, all year. So that's what you need. That's what you get. And the macro coverage and the trade setups, almost one a day with videos and the lessons that come with it. And the live trading chat that has intraday trading tickers like this. I mean, what?
The pre-market, right? So you put an update. I don't know if you showed that already.
I did not show it. I'd have to scroll way back up to get to like what to do today.
To give them an idea.
Today's plan. Before the day opens, you would have a plan.
This is Nic's life in the chat room, so you guys know he's there all day.
Yes. So let me tell you, I don't know one successful trader that does not have a trade sheet before the market opens. So TGIF folks, the plan for today, I give you what to look for, what charts to look at, what lines, support and resistance lines are in here. Let's see here. This was it. That was the chart that just popped out. Resistance, contention zone from Wednesday, resistance and open air. Guess what? They went there. So you need to be ready. You can't wing it. I have the ETFs, I have the futures contracts, and I usually have also one for the earnings that are coming out. That is part of it, Pedro.
Yes, we only have 30 spots left. By the way,
that's part of it. I mean, I promise you, here's the thing. I promise you, I bend over backwards to create value. And if you don't find it, they promise you money back. So if you're not serious, I mean, if you're not willing to risk a little bit, zero, actually, just put some money out of pocket to make sure that you're engaged. I'll tell you why you can't make it a free trial. People don't get engaged. I did a free trial with Symbolic. This is what's his name? DeMark. You've heard of him? Pretty good chartist. He's written books. He's got things named after him. He has a new platform. I think it's called Symbolic. It's cool. I reached out and I said, hey, I love your work. I do have a lot of people that look at my stuff. Would you open it up for me for free to try it out to see if I can share it with them? And he opened it up for me for free for 2 weeks, but I didn't put anything out of pocket. Guess what I didn't do? I didn't use it. And then he shut the door in my face. So if I had spent money to try it out, you can rest assured I would have been more diligent in trying it out. It's just an engaged trial as opposed to, but it's risk-free. I promise you they'll give you your money back. And I've been doing business with Benzinga since 2011, I believe. So we've been around forever and we don't do things unless they're right.
Yeah, there's a 7-day money back guarantee. And I forgot to mention, you guys are getting a laptop as well. This is the Black Friday special. Yep, we're hooking it up.
Hooking it up. So where were we? All right. So we just discussed Palantir and somebody said they were down on it. I'm long Palantir. I'm quote down on it, but I sold puts. So it doesn't matter if I'm down now. The end result is what matters. And I also can buy calls or call spreads with that. What matters is the end result versus somebody shelling money out of pocket. I have not spent anything out of pocket. I collected money to be long Palantir. So that's the difference in style. It's easier to win when I'm selling risk below current price and below support levels and below odds, where if you walk into a casino and you go in with the mentality, I'm going to beat the house, you're going to lose. But if you walk into the casino and somebody says, hey, You can win if you're only willing to do this and that. And you can play within the rules of the casino house, then you will win. And that's what we do. The market makers don't lose money. So don't take trades that require them to lose money. You will lose more than you win. You may win occasionally, but you will lose more. For example, don't buy straddles. That's what the market maker does. Okay, back to, I don't know, what's negative margin on that one? What was the conversation before that? Negative margin 3,500. Are you saying that if I sell a put, it's going to require margin? Because that's a ridiculous argument. I sell a put to buy shares. So if I don't sell a put, I have to spend way more to buy the shares. So margin requirement or not, I'm losing all that cash. Whereas if I sell a put, I'm only using part of that cash locked up. The margin requirement to sell a put is a lot lower than actually buying the shares. Okay. All right. Where are we at? So we want to do charts. Looks like everybody's hungry for charts. Who's hungry for charts, kids? Let's do charts.
Yeah, and I do want to let you guys know. So the session was till 2 p.m. So Nick, I don't know if how you're doing with time. I know we're over here about 12 minutes over. So
we're 12 minutes over.
Yeah,
okay.
12 minutes over the.
So are we allowed to do another 20 minutes of this?
Well, it's totally up to you, Nick. I mean,
okay, so I can do 20 minutes. I can do 20 minutes of this.
Yeah, maybe like till 3 or something.
Yeah.
If you want, I mean, it's up to you.
Yeah.
What the people want, if they want it.
Yeah, we'll take a 20-minute increments. I know we'll get sucked into it and we'll do more than that, but let's just do it.
Okay.
All right. So I see SPC, we already talked enough about it. NEO, we'll pull up a chart. I like it. UPST. Okay, let's go to UPST. So UPST is the classic case of why you need to know somebody that knows charts, because I could have helped you so much with that one. Okay, so let's see here. Let's go to a daily chart. If you don't know the history of the stock, look at this. This is a daily 1-year chart. We went long in this one at the right time. What we didn't know is like how far they're going to rally. So here, I took a trade. I did a video on it. I said I would sell a put spread down here or buy a call spread up here or call. And then this happened. Like, what? So my thesis was, this is a violent stock and it's stuck sideways way too long. Something's going to happen. And sure enough, this happened. Now they're saying, is it time to get long? Well, the fact that it fell 10% on Friday, no, they might be intentionally going after this gap down here. So since I'm missing a piece of the argument here, I don't know why it would rally that much and then fall that much. I'm going to give it leeway, give it rope. And maybe I'll catch it the same place I caught it the first time around. So I will wait. I put my orange dotted lines. That's where I'll say, okay, maybe I'll take another long at it. Now, fundamentally, you can do homework on the company. The P&L looks pretty good, but there's just way too much violence. And you can get long against this tick. So if you bought a long in UPST against this thing, that's great. Stop out there and re-engage lower. From a trading perspective, that's the proper thing to do. But if you're an investment and this is batch one of many, that's fine. That's UPST. So I mentioned spreads. We haven't talked spreads and options because that's a slightly longer conversation and it gets pretty exciting and we can do calendars and we can do diagonals and I have videos for that. So when you join, you have a whole bunch of videos and you don't see it there. You tell me, hey, how about a video on this? Like I owe somebody a couple of videos now. I can't remember what they were about. I'll remember it in a little bit. So I'm going to have to produce. Scalp fast. Okay. Last week they asked me, hey, how can we scalp? You say fast hands trades only when I share short-term setups based on these things. Okay. So I did a video. If this happens, then this is what I would do. This is the contract I would use. This is how I would stop myself out. So now they can see it and put it to use. Okay. Back to here. Okay, somebody mentioned NEO. We'll do NEO. I like the company. I like the P&L. I don't like the overhang headline from delisting from China. So therein lies that risk. It has a base. It went down to the prior base. If it loses this one, which is a highly unrealistic scenario, but if it does lose it, I think you're going to have an opportunity to buy it closer to 22. That's not my forecast. It has resistance above. So it's okay to be long here. knowing the headline risk that's overhang now. You keep coming back, Dorothy, with Riot. Let's just do Riot for Dorothy. All right. So Riot is at a base. So if this was a normal stock, I would say this is a get long with a tight stop scenario. See, look, buy the dip opportunity in this area stops, meaning if it falls below this, which is December 6th low, I'm out because I don't know where they want to go. This looks like a solid level for months, but guess what, folks? If you lose a solid level that's been around for months, you're going down fast and hard. So what if Bitcoin is about to take a tumble? What if? I would buy that dip, by the way. I'm a solid believer in Bitcoin. So there is an opportunity. So this is a long opportunity with tight stops, meaning don't get married to it. Don't go all in. Don't add because you bought it here. Don't add here. Add here if it happens. Otherwise, you're already long. Baba, same exact things I said for Neo. Extremely cheap, has not been able to hold the floor. It has a habit of bouncing and then look, bounces. Oh, this is it. And then it loses it. No, this is it. And then new low. Bounces, new low. You can't trust Alibaba for now. If you take risk at Alibaba, it is pure gambling. Fundamentally, it is solid as hell. Monday is going to move fast because there are a couple of headlines over the weekend. I can't read into them. One is good, one is bad. So we'll see. What else do we have? Stop loss on IWM. Well, that's Saudi. The IWM is all you have to watch this week to see whether the SPX can break out too high. The IWM must put in a big week for that to happen. The SPX needs a sneeze and it breaks out, but I think it won't happen unless the IWM have a fantastic week. Chewy is fallen into levels that should be support, but they haven't held. Therefore, you have to respect the price action regardless of how much you love the stock. I did say you can try to catch the falling knife and then you stop, tight stop. And guess what? They did not stop and they went down to here. So now you look left. By the way, that's a trick. If you don't know stock charts at all, get this, write this down. Wait, what did I do here? This one. So do this. Look left. That's it. Add this next to NTNT. Say look left. So I look left, and that was a nice 2 months consolidation zone and a breakout level from a month before that. And basically, you have to go down to the IPO day to get to that level. So it's too late to panic out. Technically, it's broken. It hasn't found support yet, but it's too late to panic. And it's too early to add. If you bought the dip and it didn't work, you either stop out or you say, I'm in it. And let's see. If I sold a put, I wouldn't defend it. I would take shares. If I sold the put spread, I wouldn't defend it. I would take shares and sell the other put for protection that I bought for protection and make my break-even point even lower. All right. I'm scrolling back down. Pins. I saw pins. Somebody asked for pins earlier. Okay. Pinterest, also a mystery. You know, if indeed the virus was breaking out, why is pin not finding a floor? So if you look left, is this a good time to get out of pins or what? Nobody? Okay. No, it's not. Okay. This was yes, it's a major fail here, major fail here. It took them almost a year, if not more, to get back to here. These are weekly candles, weekly. Every candle is 1 week. Look at how long the battle was here. September 2020, boom. They gave it all back up. They're back into it. This is a decent start for pins. One of two. So there is a chance they come down to here. So I wouldn't go all in. If I usually don't average down, that's bad. Average in, difference. Averaging down, if you take 100 shares risk, usually you go all 100 and then the stock falls, you add another 100, you just made your problem bigger. Averaging in, if you take 100, you take 50, you leave room. If it dips, you add the other 50, you averaged in. That's proper. Averaging down, no bueno. So pins is not an exit point. That's a better start than end. W. Violent stock, I can't trust it. This falling knife is scary. It's going into the holiday season. I've seen advertisement for them. I don't know if they're going to deliver the headline people expect. So this is a neckline that's been hanging around too long. I wouldn't touch it here. That's personal preference. This is a better entry point somewhere down here. I don't know if it gets there. I'm willing to wait. JP Morgan, I do not like banks up here. Think about it. Think about it. So let me pull up a weekly chart on banks. This is arguably the best bank on the planet, right? And for a while, they couldn't catch a break. They couldn't maintain a rally or anything, banks in general. And then the Fed went into ballistic mode in spending. And part of it was some bull crap stuff like the reverse repo, which gave banks like 200 million overnight. That stuff is going to go away. When the Fed stops in this emergency stuff, that gravy train is going away. So I would not be a holder of banks up here. They're tradable. You can trade the action. Let me see what I have. So a resistance zone above, support zone below, it's stuck in a range. You could sell a put spread here, kill time. In fact, Citigroup shows a bounce level coming, but I don't trust it. Look, I charted it, but I don't trust it. Let me show you here, 1 weekly. There we go. This could happen, and it's harmonic trade setup too. So it is doable, but not for me. All right. Goldman Sachs. Wow, we're on banks here. Same comments. Okay. So here's with Goldman Sachs. I've shorted it several times this year very successfully. And one of these was one of them as well. I sold call spreads, which is a bearish position that collects money. I bought puts with it. So I was really aggressively short Goldman Sachs. It was an FU type of a trade because one day they started. Anyway, long story. So what am I looking at here? Price behaviors. The bears are in control. They're selling the pops. So the important part is what happens here and here. So this candle is important. So 388 is important, give or minus $1. That's your first bear setup. If you lose that, then the battle goes around to 380, 378, 376. You do not want to lose that. You lose that, you get to 350. I'm not saying that's where it's going. I'm saying that's what the bears are doing. They're selling pops. And if they continue selling pops and they chip away at the footing below you, that's how you break a stock. So they are selling pops. They're trying to hold the floor. The range is going from here. It's going to come to blows. They can do this. They overwhelm the buyers. And if they break the floor, they overshoot lower. And this is about the dip that happens. But in this case, there's a battle here first. I just told you. So look at the lows from last week and this candle here. That's Goldman Sachs. What you want to do is step one, break out of this descending trend. How you break prior fail. So you do your own battle here and you pop over here and you start building an ascending trend. Okay, Beyond Meat. Let's go to Beyond Meat. I don't know. Every time I say Beyond Meat, I remember Soylent Green. Google that movie. Okay, so, Danger, Will Robinson. Wow, you do not want to lose this. You lose that one, opens a floor. We don't know where it's going. Let's look left. That's where it's going. So it will go to 50 with some support at 57 if you lose that support. Careful. Oracle, it's right here. I don't have to scroll up. Whoa. Okay, 1 day, reset. Let's see what I said to Oracle. Buy the dip opportunity, but be careful of this. Okay, so that means buy the dip and stop out immediately. If it doesn't work, try again lower. That's good support. So this one should be like here. Oh my God. Oh, Jesus Christ. What? It's not letting me move it. This should be higher. Oh, maybe it's this one. Yeah, this should be higher. TTCF. So the tattooed chef, I like the concept. The stock has not been, we've traded it well, and I haven't traded in a long time. I can't remember the last outcome of the trade. Here's the thing. If you don't book your profits fast with this one, if you fall in love with the stock, like who didn't book profits up here or here? I would have been out like here if I caught this in. So you can't overstay your welcome. Clover, I would own for the long term. It's either like it's either fake or not, and I'm betting it's not. And I did not look at it here last week. Let me see, Clover. Woo-wee. Yeah, I would own shares forever. It's $4. Why bother with options? The options themselves are, the shares are pretty much an option. So One of these days, you're going to wake up and say, oh, it's not fake. It's actually making money. I don't know. But
Why are
it's
you
a
bullish?
it's
Why
a
are you
very
bullish on Clover?
I'm not. It's a speculative bet. I
Oh.
just said I'm betting up. I literally am betting up. Every headline that falls on involves a lawsuit. So the lawsuits in America get settled. And then once the announcement of the settlement happens, then we move past it. Okay, BNTX. What is this? BioNTech. Is this a vaccine? So this is Moderna, basically, mRNA? Yeah. So is it cheaper? No. Why bother with that? I would do Moderna. But anyway, they're both falling into support. Buy the dip opportunity failed, falling into second buy the dip opportunity. So here's the thing with options. It is not cool to sell options on the biotech for me, because when I sell an option, I'm literally planning risk around price action and levels. Well, with these guys, and I usually avoid earnings because I don't know what the people are going to do overnight. So with these guys, every day is like an earnings day. You get a headline out of nowhere that just changes the game for these guys. So what if the headline comes out, oh my gosh, the new version of this virus, this Moderna thing doesn't do anything against it. Whoosh, you get killed through no fault of your own. Or vice versa. Oh, there's no problem with the new variation of the virus. Moderna is killing it. Whoosh, it goes the way up. So there's a lot of guessing. And if you own the company shares, that's great. If you want to own the company shares, sell a put on a really bad day. Then you get gobs of money. Peloton, falling knife, just lost support. Forget about it. Ear, you're so dying to see what's ear about. This is what we're going after. Okay, this is a daily chart. I can tell you from this daily chart on this micro cap, which usually charts don't help a lot, except in this case, they're saying it's a broken stock. So you need to do homework on the company to see if it's a company broken or what. I mean, there's nothing I can tell you from the chart except that it cannot find a floor. And that this is the highest point of volume. So somebody asked me what indicators I have. That's the only indicator I use. Volume profile. Here, the only saving grace is that there's a crap ton of volume. And unfortunately, it's right above your head. So not a good situation for ear. FSR, we did BYND. Where were you? FSR, not my favorite. So whoever bought it here needs to be a little bit more diligent with the charts. I know it's all about excitement, but trust me when I tell you, charts matter more than fundamentals and hoopla right now, because machines control the price action, and that's what they use, data on the charts. If you keep yourself blind to it, you're keeping a big tool out of your toolbox on purpose. I don't know why anybody would do that. You're saying you don't have time? Get somebody's help that has time. Belong to a service that tells you, you send a request, say, hey, tell me about this chart. What do you see? Let me see. Can we think of a service that does that, Rodrigo? Yes, me. I do that all day. So if you need help with the charts, join the group. This all by itself is reason enough to spend the money for it. And by the way, it's nowhere near the value that I put to it. So lose 1630 and you will come down to 13 to 14. Meanwhile, you have to tackle the resistance through 20.2-ish. So you're stuck between sellers and buyers. Whoever gives in first, the other side will burst. So if you take out 20.2, 20.3, I think it can burst to 22 and challenge that, and then you buy it for a momentum trade. If you're looking for an investment, a dip into support would be placed, but expect that batch 1 of 2, because if you lose that support, you're going to have to add lower. So this would be the best entry price if you get it. And I have my alert down here because I don't want to own the shares. I guess I can put an alert down here. That's FSR. Fundamentally, there's no reason to look at anything. They have no income yet. Cover options flow. Thank you. Options flow volume, you mean? Like I don't track options flow. I have a lot of people in there that actually have services where it tells them, like, you know, people, big money, what they're doing with options. I don't do that, but I can discuss them with you for sure. So Zillow, I usually cover it through Zillow Group, same company. That's where my drawings are. If you go to a weekly chart, you can see the base that it just set. So it is an opportunity, a trading opportunity. It fell violently into a base. I do caution about how they left that one buying homes venture. I don't want to find out down the line that they were forced legally to do it, like they were caught cheating. I don't want to find out. But this is whoever bought the dip was not crazy. In Zillow Group, Hood is a falling machete. If you buy it now, you're assuming this is the bottom and you've got nothing else but hope. So that's not my jam. But if you do that, then you must stop yourself out at X% loss. If you risk 1,000, you should set yourself a limit. Say, hey, if I lose 20%, if I lose $100 or 300, whatever that number is, set an exit point, because this is a violent broken down. AMC, so I can't stand the fundamentals of this company and the cockiness of the people who say to the moon, because that's clearly not correct from an investment perspective. However, it's a beautiful trading chart. So if you are a good trader, you can get long against this base and stop out immediately, because that will bring you 18 if you lose it. But that is a trading base this week versus the resistance up here. Do they have an earnings report or something? No. Okay, so you have a base. You can trade against that base. If the base fails, you retreat immediately and try again lower. That's the trading mentality here. NVIDIA and AMD are about the same thing right now. It's not an obvious entry point, but if the market recovers and makes new highs, yes, they will. This is a pretty violently bullish candle, so you can bet your money against it with this one. So dips into this prior base. As ginger as it is around 290, it's better to be long than short starting for NVIDIA. But be aware that one sneeze overall will bring you down to here quickly. And that is not through its own fault. I don't think it does that all by itself. And there are several resistant support lines in between. But from a long-term perspective, this is not an investment entry, but it's definitely tradable. I bet you same comments on AMD. You know who I would own out of these two? Can anybody guess? I would own Intel. I would own Intel. Why? Who's bigger, Intel, AMD, or NVIDIA? Intel. Intel is bigger than AMD and NVIDIA put together twice. So it's a monster, and it just woke up. So here's the thing with Intel. Well, AMD is better than NVIDIA from a valuation perspective. It grows faster and it's cheaper, much cheaper valuation. Intel is like cheaper than banks. It has a single digit PE, maybe 10 now. So it's ridiculously cheap, no respect. NVIDIA and AMD are tradable stocks. So it has support here, but if that fails, it has strong support here. They're both investable trades. But from an investment perspective, if I want to own NVIDIA for the long term, that's my third favorite. AMD, my second, but not even like a second. It's like a first and 2/3. I would invest in Intel. I would not invest in AMD or NVIDIA right now at these levels. Intel, I said get long Intel for the long term, like a day, maybe hours before this pop happened, when they came out and said they're spinning off something. What was that? The eyeball company, I think. Anyway. So for self-driving, what is it called? Mobileye. So I didn't even know they owned Mobileye, but then boom, 10% up. So if you bought NVIDIA up 10%, you're clearly not in my group, because that is where I would tell you to book your profits. Why? Look left. You think that's a coincidence? If you don't believe in technical analysis, then you believe in coincidences, then I have a bridge to sell you, because this happens all the time. Check this out. Right here, look left. The exact middle of that candle. So there are no coincidences. Machines behave based on data, and the data lives left on the chart. You don't have to be a chartist. You just look left. Say, hey, what happened the last time the stock was here? Oof, a ton of money lost. Yeah, maybe I should wait out another tick. Danaher right here. Is that DHR? DR Horton. No, Danaher. Okay. Nothing to be said. Range bound, you got a limit up, limit down. So if you want to trade the range, you get long here, you fade it here until one of those edges break apart. and you chase it in that way. Microsoft, no way I would touch it up here from an investment perspective. From a trading perspective, maybe you can chase a breakout of here, but no way. This is tough. If you're not long from here, you missed it. So it depends on your, where am I from? I was raised on the streets of Beirut during the war. AbbVie, yeah, I saw it come through. I live in Southern California right now, if that's what you're asking. It's probably not what you're asking. Okay, so is this an entry point for AbbVie? Anyone here that you listen to me? Yeah, Iron Condor would be good on that. Say, no, good one, Cools. Puts, yeah, maybe. But you got to tell me if you're buying them. Timothy knows what's going on. Okay, so look left. So it could be a breakout, but buying here is just dang risky. So I would rather let it go without me, and it's okay. It's okay to see a stock move without you. This is not here's how I would say it. This is not an obvious entry point. So if my mom says, hey, I'm looking to invest in AbbVie. No, mom, you're like 90. You can't be investing in AbbVie up here right now. Dual top, no. Every breakout start with a double top. So I don't subscribe to that part. It's just an area where it got sold 3 times last time. That's a month. And this is a month that's ongoing. You don't want it to look like one of these, because that, if it closes down here, it would look like a long tail like these. So this is a month ongoing. Let's do it on a weekly. How many weeks was that? Look, 1, 2, 3, 4, 5 weeks of long tails. So this finally, the week closed above here. That's the highest close ever on a weekly basis. Let's see what it does next. So you have puts on AMD. Do you mean you bought puts or did you sell puts? That's a perfect example. Let's manage this fellow. Alex, thank you for sharing. It takes guts to do that. Okay, in the chat room, Alex would pop in and say, I have puts on AMD. You bought puts. What was your thesis on AMD and when? I appreciate you sharing this. This is in the chat. We are in the chat room right now. That's what we're doing. Alex bought puts, and I assume, are you winning or losing? Oh, break even at 129. I don't know what that means. So anyway, if they bought puts, oh, you're losing. Okay. So you must have bought, first of all, when you buy even puts and the stock moves in your favor, if you bought them when the VIX was high, you're going to lose money from the VIX falling. Just that's it. It's that simple. So the VIX will eat at your profits even if you guess the correct direction. So you have to be surgical with that part. In this case, Alex, you have to decide, first of all, if the reason why you bought the puts is still there. If you didn't have a reason, that's reason enough to leave the trade. Okay. So if the reason is not there anymore, you should consider exiting. Now, I have to tell you that this was support. This is support. You lose this one, 134. That would be a reason to short it and buy puts. If you didn't have such a reason, then I would have thought that you anticipated a drop. Like if somebody bought it here, let me go down to 120. Okay. So if somebody shorted AMD on this tick here, they did right. And let me share with you why. Now they have a reason. They're not just shorting because it's high. So AMD, this candle just sticks out. I just saw it. This right here. Clearly this one sticks out. But this one here shows indecision and a line right here. And look, I'm going to extend the stomach of it. Check it out. Okay. This one also sticks out. And same with this one. So now they broke out and then they're coming to test it. So here, arguably, they just lost a battle, or here and here. But now that this happened and Alex has puts on his hands, Alex will be praying for this to fail. Because if this fails, they're going to do something like this. They have support, but they're going to be testing it. Now, notice how the bulls are trying to recover these lines they've just lost. That is a problem. So Alex, tomorrow, monitor this area versus this area and decide whether you want to get out of your puts. So if the bulls go above there, then I would get out of the puts, especially if you didn't have a specific reason or you're running out of time. If they lose the 136, I would stay in the puts, because if you don't run out of time, your chances are you're going to get some pretty good action on it. That stuff just happened in the chat room. This happens all day. LAC. By the way, LAC is a cheap way of trading Tesla. Let me see here. The other day we were doing a live session. I was like, wait, this is like Tesla. It's a cheap way of trading Tesla stock. Okay, somebody's asking about the VIX. No, Jamie, it's a time to not buy stuff. And if you do buy something, buy a spread. Because if I buy a spread, that expensive part goes away. I buy a call and I sell a call. They're both expensive. They neutralize each other. I buy a put, I sell a put. They're both expensive. They neutralize each other. But if the VIX is really high and I want to own a stock and that stock is falling, I would sell a put, because that put's going to be like 3 times as fat or twice as fat as it usually is. And then when everybody calms down and the VIX calms down, then immediate profit happens. Butterflies. Tell me, buy or sell? I don't know what you're saying. Oh, butterfly buying. Yeah, it'd be the same, because you're buying 2 and selling 2. What is an iron condor? Excellent question. Excellent question. It's a really rare bird that flies over. No, it's not. An iron condor is it's a bird that's made out of metal. So, who's this? Okay, so this one, you do not want to lose that. That's a head and shoulders. This will bring 26 or 23, 25. An iron condor is a trade that is bullish and bearish. Let me zoom out of here and show you the visual of it. Okay, so I'm going to show you the visual. This is not a trade recommendation, please, but this is the only way I can show it, by showing a visual of it. So I already told you selling a put. Actually, let's do it from scratch. Selling a put is a way for me to get long a stock, right? I can sell a put. I'm long the stock. But sometimes I don't want to take all the risks, so I can sell a put spread. That's the same thing. I'm selling a put spread. I am, quote, long the stock. This trade wins if price doesn't fall through 133. If it falls to 133 and it dies there, price, it holds, this trade yields profit, a lot of profit percentage-wise. Now, that's a bullish trade that does not need a rally to win. It's called a bull put spread. It's called a credit put spread. That's what I love to do all day, every day on stocks I like, into positions I like. Avoiding earnings. Now, you can modify it by taking the opposite bet to your bet and place another one up here. Okay, so the idea now becomes, I'm taking a bearish trade, I'm taking a bullish trade. All I need is price to do nothing. It can ping pong in between these two. What's going on outside my house? It's ping pongs between these two, and I win. So I win on this side, I win on that side, as long as price stays moderate. And if I take my trade in low deltas, then I have the odds in my favor. In this case, these are not them. These are high deltas. Those are not, that's too long. If this was like January, I mean, not January, closer in time, maybe, but this is, who is this? Oh, Lucid, that's why. It's a pretty violent stock. And there's one column we haven't defined. I'll get to it in a second. It's important in this case. So it's a violent stock. Chances are it's going to whipsaw close to 32, close to 44. It is possible. It is a violent stock. So this is not a recommendation of an iron condor. This is a representation of what an iron condor would be. If I'm more bearish than bullish, I'll like move these closer. If I'm more bullish than bearish, I'll move these closer and move these up. So I have a balance that I usually share, and those have 85% to 92% odds of success. Not these, not these. My iron condors. This is not them. This is a representation. How do I close an iron condor? I reverse it. I buy everything I sold. I sell everything I bought. And sometimes, actually, this came up. Okay, so I did an iron condor on Boeing. I'll show you an exact example of that. So BA, I shared it with the gang. Oh, and wait. Ooh, me, Mr. Kate. So can you tell I'm hopped up on stuff, caffeine and pre-workout? Okay, so I sold an iron condor on Bank of America, Boeing, and my risk up here was a 255. That was here somewhere. I remember I sold it, and 2 days later it had a pop on some headline, and the upper side got into hot water. So I sold the call spread here, and I sold the put spread at 190 down here. So this got under pressure. I didn't do anything. This got under pressure. I didn't do anything. And on Friday, I closed the credit put spread for 20 cents. I bought it back. I collected almost $1 for it, and I paid back 20 cents to close some. Because why? Because it was too cheap, and there's still like 14 days on the clock. I was like, you know what? Crap happens. Let me take some risk off the table and book some profits and leave some money on the table. Same thing with Amazon. I'll show you the trade I shared in the chat room for Amazon, I believe with a video. Okay, so it was an iron condor that was $1 wide on each, $10 wide on each side. That was on 12/2. And Amazon was active, the market was active. So I said, okay, there's nothing to do with Amazon. I don't have a trigger up. I don't have a trigger down. I love the company. I think it's going to 4,200 by February if they break out finally one more time. And I said, okay, so meanwhile, we can just kill some time and collect some premium. And I basically, if I did one contract, I collected $200. And yesterday they were like 40 cents each to buy. This is a misquote because we're off hours. This should be about 50 cents maybe. So collected $200 per contract. Now I can buy the whole thing back for, say, less than $1, say 50 cents or 70 cents or 80 cents, whatever it is. So then I made money out of thin air. That's it. And all I needed is for Amazon to stay between these two things, 3,000 and 3,700, basically. From at the time, it was 34. So look how well that iron condor was placed. On the second, open price, that's a static number from the day I shared it. Friday, like points away, 7 points away. So it was wild in between, I'm sure of it. But in 10 days, we're back to where we started. That's why it's dying in my favor. That's why the delta, look how low the delta are. So the delta is under 0.1. So there's very little chance that these two are going to be killed. And guess what? If I took 10 of these, I would close most of them. So that is the actual table I shared, probably with the video. I can't remember if I did the video, but that was it. I believe I did iron condor video when waiting for something to happen. And, Amazon just did nothing. It went up, went down, and that's perfect. That's what you wanted to do. Go up and go down. And I didn't even check on my trade. That's how confident I was of the range. Pfizer, not an entry point here. Way too high, Dorothy. And Pfizer used to be a play. We already did Hood. It's a cat falling knife. So Pfizer used to have the funny statement that that's where money went to die because they did nothing. And then the pandemic came and brought them back. In fact, look, this is Pfizer. I'm going to go to a quarterly chart. It took them, so 1999 levels, they just broke it. It took a pandemic to break from a 1999 level. So not my jam. And definitely not an obvious entry point. All right, what else? I think we're toast. Have we not? Has the neighbors come and complained yet, Rodrigo? Unity, I like it long here, Shu. I'm looking to get long.
Well, Nick, it's up to you. I know that you have some things.
Yeah,
you have to get back
I need
to
like wrap it up. Maybe we'll take two tickers. Square, it's a good starting point, but not all in. Fubo we did already. SPY, there's no need. AMAT, you mentioned AMAT before, so we'll do AMAT for a second. I haven't looked at it in a while. Whoa, what are you asking me? Let's deal with Carlos. Carlos, what are you asking me on AMAT?
My God, what is that?
Are you asking permission to get long? You will never get it from me. Are you asking permission to short? I would sell a call spread, but stop out on an immediate breakout into a new high because you don't want that to happen. Okay, so you're basically here. Yeah, you can't short it with conviction, meaning like outright short. Sienna puts, you want to buy them or sell them? See? Affirm is okay. Buy them. Well, you're trying to short a very fast gazelle. So know where to stop. Yeah, I don't blame you for doing that. Skills, I stopped looking at them. Affirm, good company. I would wait for lower prices. I would pick SoFi over Affirm right now. Oh, okay. So Jami is asking, what's the difference between a credit put spread and a credit call spread? They're opposites. So if you had asked me what's the difference between a credit call spread and a debit put spread, I would explain. So credit call spread says, let's go back to that other ticker. Credit call spread says if I sell one here, I sell a call and I buy a call above it, I'm saying it's not going above that. But I don't need a drop to win. I'm bearish the stock without needing a drop to win. It can stall and I can still win. Versus buying a put or buying a put spread, I need a drop to win. Now, what you're asking is, what's the difference between a credit call spread and a credit put spread? My answer is yes. They're the difference to each other. They're opposites. One says it can't rally. One says it can't fall. Therefore, it's going to stay in between. That's an iron condor. Okay. I think we're done. SNDL sundial. Well, I prefer. Oh, Jesus. Anyway, sundial is okay.
All right, Nick. So, yeah, go ahead.
Nothing. I can't remember. What's Tilray? Jeez, I couldn't remember. I prefer being long Tilray just because I know more about it. But sundial is a cheaper dollar out of pocket, so it's an easier bet to make long term with money. But it's not cheaper risk, but just cheaper bet out of pocket. Okay.
Nick, any closing remarks here on your end on why the folks here should join the chat room here? What you'll be looking into next week and all that stuff?
Yes. You should join the chat room because it sounds like you need it, just because you're hungry for charts and you want to learn a new tool, which is options. And this is a place where you can do it over a period of time. Anytime you don't have to be in the chat room. You can be, you pop in at, check in the morning if you're actively trading to see what the day is going to look like. Read the notes that come out in the middle of the afternoon. Watch the video that comes out almost once a day, 12, 15-minute video about trading. You would learn a little bit about options and technical analysis. Ask questions, a million questions. I will answer them all, I promise. Treat it like a classroom all year long for piddly crap expense. I promise you the price you're paying is nowhere near the effort we put into it. And there is value in there. And somebody's dying for Roku. That right there is reason for you to be in the chat room. I like Roku down here, but it is a violent stock, Sam. No problem, Sam. That's what we do in there. And if we're just going to start also breaking out into some crypto stuff. I've been trading crypto successfully. I haven't had a losing trade yet because I haven't done a lot. And I just experienced my first loss, not from trading, from a surprise expense that I didn't know about. So I can share my whole story with you. It's pretty funny, actually. But
Shu is asking if you give out trade recommendations in the chat room or trade ideas.
Yes, almost one a day with full videos. But I am not a trade alert service. If you're going in to get a trade alert service, you're missing out on the biggest selling point of this, which is you finding a fishing pole that you learn how to use so you can fish all the fish you want. And the trade alert part is secondary. And I definitely don't tell you when to get out of my trades because you have a different portfolio than me. What is suitable for me may or may not be suitable for you. Dividend stocks, we can talk about dividend stocks. Let's see here. Verizon would be probably my top pick. My second one would be something either Exxon or Chevron or crypto. I get 10% on my crypto risk, and it's a stable coin. It pegs the dollar 10%. That's part of my story. I made a mistake trying to do it somewhere else. So do I do a trading journal? I keep my own journal. I just showed you a piece of it. Doge, buy it under 18, you'd be fine for trade. Do I short Jim Cramer stock? I would, but I don't watch him. So if you want to give me a list, I'll try. By the way, watch Zero News. You want to be a better trader? Turn off CNBC. I promise you, they don't have your best interest at hand. They want to maximize your viewership, their viewership. Therefore, they will say anything to get you to watch, true or not. So do your own homework. Watch it for entertainment if you want. But if you don't watch it, you'll be a better trader. I promise. I promise.
Absolutely. I agree with that one, Nick. All right. Let me go ahead and share my screen. I'm going to show the chat room guys to you really quick.
Okay. I'm going to bail because I'm getting yelled at back there. So I appreciate the opportunity. And maybe I'll see some of you in there.
Sounds good. Sounds good, Nick. We'll see you there in the chat room, guys.
Abdul, yes, we do have a live trading screen that I'm starting to share all day. I did it all week this week. I'm trying to make it a commitment because shukran, ahlan. It is extremely taxing on me, but I will try to keep it up. I don't day trade. I trade daily, but if I had the choice, I would strictly swing. Just less work, same money, less work. All right, I'm out. Peace.
All right, guys, I'm going to stay here for a couple minutes just answering questions on Nick's chat room. I'm showing you the checkout there. Regular price is $6,000. You can see you guys are getting the Black Friday deal. Comes out to $1,297 for the year. That's a lifetime price. That means that next year you'll renew with the same discount. It's not going to change. Once you are able to sign up and everything, you're going to see this tool. We just added it. We're going to keep adding more tools in this particular page. And we have a new chat room in the final stages from development. Justin, I'm posting the link here. You can click it there so that you can get the deal. This deal from today is the one that you'll keep that 78% off, at renewal every year. And it comes with the laptop as well, Justin. So if you guys have questions, it's a 7-day money back guarantee period. So you can try it for 7 days, trade with Nick, go to the, by the way, and this does include the sessions that are on Sundays. And that's not this session, meaning Nick every Sunday meets up with the chat members and they go over about 150 stocks like you saw. I think this is the video that I'm showing you on the screen, 2 hours long, 2 hours. And this was right before he joined us here. So you can actually see if you miss the session by any chance, you can actually catch the recording every single time. You can watch it as many times as you want. This is what I'm talking about when I'm saying that chat members, get priority, of course. They have all of these videos, but they also have the prior sessions like today and the one we did Thursday and Tuesday with Nick. So all of the sessions that Nick does, everybody knows here, he gives education. So yeah, I'm going to throw the link in the chat one more time, guys, here. If you have questions, I'll throw in my contact. Justin, don't buy that laptop. Get the one we'll give you here. All right. You're going to get it after the 7-day money back period. We would ship it out to you. So now if you do want us to, if you do want to forego the 7-day refund period, we can send it out today. Just, shoot me an email. Let me know that you're willing to do that. And that way we can send you the laptop immediately when you sign up. And tomorrow I'll send it out. Nidishi, no, it wouldn't change. The laptop is just a courtesy gift. I wouldn't really put much mind into it. Really, it's actually the chat room. Really, what you're getting. Yeah, it's just a courtesy It's an early Christmas gift. Okay, we just wanted to be a little nice. That's it. Justin, it's a new Google Chromebook. You do not have to return this. It's yours. You keep it. You're not renting it. You're not leasing it. It's from Google. Call the office, Ron. Tomorrow. No, Adam. So like this is not like Nick is recommending, he's giving you trade ideas. So you can see there in the chat room. This is the video, right? Number one, this is a video of like 124 charts for 2 hours. If you cannot find trade ideas in 124 tickers, like reviewing them one by one, that's already, that's an issue because you're getting so much here, so much content. Not just that, but anybody that has a question, you get a direct answer chart, comments, technicals. Yeah, Justin, we could talk a little bit later today, or actually, I'll throw my contact there. 1 second. By the way, this does expire at midnight, guys. So yeah, Abdul, it would renew automatically at the same price. it will not change on you. This is not like one of those yearly introductory discounts. This is a real official, like back in the old days, like, things were like legit handshaking. This is what that is. A full lifetime discount, guys. Full lifetime discount. All right. So, I mean, you can see here, Nic is playing the earnings as well. So, um, this is what it's about: trading with a community, verified traders. Nobody here is, it's not like one of these Discord chats. It's not like one of these Reddit boards. These are real traders, verified people, verified traders that are part of the Benzinga community that follow Nic and have learned with Nic and profited with that. So it's definitely a niche, I would say, of individuals that are really trying to up their options trading game. That's what it's all about. That's what people are doing there. Everybody's learning, everybody's trading around options, and also you have to learn from somebody that knows what they're doing, like Nic. So imagine you having direct access to Nic for any trade that you're in, that you want to get in, or maybe you're underwater. Guessing doesn't work, and hoping is just gonna make you lose everything. So if your P&L is not where you want it to be, then definitely I suggest joining Nic's community, because he's there all day, every single day, on Sundays, even giving you guys the recording and answering every single question about your trades or feedback on your trades if you're trying to test a strategy. Let's just see what we have here. Something about Snapchat. So, I mean, right here, you can see a full analysis of Snapchat. And he probably went over Snapchat in that 2-hour video. So if you see a laptop, guys, in the checkout right here where I'm showing it, if you see that laptop, that means that you are getting the laptop, okay? If it's not there, that means that we're out of laptops. So that would have to be, when you go to the checkout, make sure that you're looking at that laptop there to make sure you get it. All right, I'll post the link here one more time, guys. And if you have questions, right now is the time before we do close the stream here, guys, for the day. Adam, it's Nic's chat room. It's a trading room, actually. So you're going to be trading with him all day. He can be your trading partner. He can be your trading mentor for options. He can be whatever you need him to be, right? So some people are more advanced. Some people are a little bit newer. So they have different needs, obviously, and different questions. So regardless, if you're new or not, everybody gets value from trading with Nic and that community. Tawari is asking, is the chat room available on mobile platforms also? Yes, it's browser based. So that means that you can use it from your phone, from your computer, from your laptop. You can use it from anywhere. You don't have to download anything. Adam, no, you do not. You do not need. You can use whichever account you want. This is basically going to give you, like, look at it this way. Nic's chat room is like the golden fountain of options, trade ideas, and education. The brokerage where you put the trade in, that's just it. It's meant to put the trade, and that's all you should use it for. Trade ideas, get them from the chat room from Nic, and there's tons of those trade ideas there. Like, put aside the 100 something tickers Nic does every week. Regularly, people are always talking about options, they're in or not. Nic Chahine talking about Lucid over there. Someone's asking him about a firm, about Asana. Let's see what he put about Asana. Okay. So, I mean, I'm getting trade ideas from doing this right now because I was already looking at the stock, but I didn't know what he thought about it or like his. So if you guys enjoyed like him going through tickers and all that stuff, I mean, you could spend days just going over the material in the chat room, and you will have so many good trade ideas, so much education inside that. Let's see, Sophie under fire with small caps, ARC like stocks out of favor. It's like PLTR are caught up in it. All right, what is this? Sophie? Okay. So there are charts here about Sophie. I mean, this is the, like I said, this is the golden fountain of trade ideas, literally with levels right here. You're thinking about buying calls or selling puts or selling calls. You have all the levels right here. You need to read between the line, guys. This is a lot. And you have the support zone in the bottom. So, I mean, you could trade this many different ways. That's interesting, Sophie. See what other trade ideas Nick has here. Ronnie's asking, yeah, he does, Ronnie. He does. I mean, risk management is already there. Like in that picture, in that screenshot I was showing you about. All right, let me go back to this. Sophie, okay. This is risk management, what you're seeing here, all of the levels being laid out for you. I mean, there's not a big letter here that says this is risk management, but you need to read between the lines. That's what I was saying. These are the levels already pointed out for you. This is how you need to structure your trade with these levels. So, I mean, this is just a trade idea, one of them, one chart that Nick put up there. But, he does this every single day. So you're going to have tons and tons of different trade ideas, and everything you need is in the chart. That's why Nick sets it up that way. Let's see, he's talking about S&P futures. Does anybody know where the futures are right now? Just curious. Let's see some other charts. Adam, I mean, a lot of people in the chat room can give you recommendations on what they use. At the end of the day, it's a trusted community. It's a trusted, verified community. Tell me if you can trust Reddit. Tell me if you can trust, these other pump and dump chat rooms out there. You can't, man. You need to, the community of Benzinga, is we're all about retail. This is all about helping retail traders. So, this is your community, like it or not. This is, where we all gather, meet, and talk about trades and stuff like that. Let's see these. Okay, so this is the session, right? 12-10. There was a session on the 10th. So Nick is, I mean, you can see he's throwing out sessions here and there, plus the regular Sunday session that is for 2 hours. Kumar is asking, is it specific to options or stock prices? Options. Nick is an options trader, but there are people that don't trade options. They only trade equities, and they like Nick's analysis. They like his approach to trading. It's the levels. It's the levels that matter. You can trade with options or you cannot. It's the levels ultimately. You need to buy at the right time. So risk management is definitely big on everything that Nick does. Yeah, Ronnie, those are the levels. What I just went over in the chart. So those would be your points right there. Now, how much you think you want to sell at, like, that's always up to you. But you have indicated levels there that can help you with that. So, we got to make sure that you have a strategy, you have a plan, not just, until you feel like it, until you feel like selling, that's going to be. So look at this, guys. All right, Nick is saying, thank God it's Friday. The plan today, markets are so silly. The inflation report came out as expected. So the indexes doubled their greens in 1 minute. This is a relief pop and they usually fade a bit. So, I mean, this is a full market update, guys, that you're going to be getting every single day. You have a pre-market update in the morning. You have an update, like a midday update, which is something like what this, like, no, this is the morning. This is the morning update. Look, 8:48, I think so. Because he wasn't doing this at 9 p.m. for sure. So this was like 8:48 a.m. pre-market, giving you the full plan of the day. All of the indexes charted out. S&P 500 right there. Triple Qs right there. With notes and full analysis. Like it's time to stop guessing, guys. It's time to start trading with a strategy. IWM futures. Someone here was talking about futures right here. Futures are being charted as well, ladies and gentlemen. You get this at 8:30 a.m. All right. Look at this beauty right here. You don't have to be scanning the futures and the indexes every single day. You let Nick, a real trading professional, do it, an options professional, 2 decades in the game. So this is every morning. You're going to get this every morning. Let's finish reading here. In reality, the news is still bad, highest levels of inflation since 1980s. The pop is because it wasn't worse, so it's not like it is good news in the end. So what now? I would let the morning trade without me, then revisit my setups. So you have his own strategy, like what he's doing that day. And you can see everybody's like, good morning, good morning. So like I'm telling you guys, it's a great environment to learn, to ask questions, to trade with Nick, to ask for feedback. It's the only environment I would feel comfortable truly comfortable as a retail trader. Yes, in addition with this, you get that. That is the special price. You do get those trades, but you have to email me after you sign up. Otherwise, you don't get it. That's the only thing. So the deal expires at midnight, guys. I think you have some time, but the laptops are not going to be around till midnight. I don't think so. So I would just at least lock that laptop in. It's free. I mean, can't say no to free stuff. So I put the link in there, guys, for you. Let's see what else Nick is doing here in the chat room. So that was the morning update. All right. Constant updates. VIX 21.6, still important like yesterday, short term. Bears wanted to break from it. Bulls hope they don't. RTY. Okay, so this is constant updates on the market, constant feedback on your trades. I mean, you can see the chat, the back and forth. Live charting session. Please mute your mic. Please first hit me with direct messages there. So yeah, this is the community. This is where you meet up with Nick. You talk about your portfolio, about your strategies, about what you want to do. This is another video here that Nick made on Merck. So all of this comes with today's deal. Plus you get those trade ideas sent to you by email. So that's the Black Friday special. We extended it. This is another update here from Nick. Let's see, this is on the 9th. I think this is like a general update on the market. So you get all of this and the direct message access to Nick, guys. So I'll post the link here one more time. We're going to close the stream here in a bit, guys. Country, send me an email on YouTube there. So, all right, guys, I'm going to drop the link here one more time. I'll be tuning out. I definitely appreciate you guys coming in today, spending some time with Nick and the crew at Benzinga. So any questions, reach out at the contact that's in the chat or the YouTube description. And I'm dropping it in the Zoom chat as well. All right, guys, thanks for joining here. Thanks for joining us today, and we'll see you guys in the next time.